Good evening, everyone, and welcome to Price Action Training School MACD Divergence. Today's lesson is 30th of January 2016. My name is Nenad, also known as Tarantula, and today we will speak about MACD Divergence. As you remember, previous lesson was about MACD, and we talked about MACD, how to use it MACD, and generally today we will speak about divergence. Next class we will be about learning how to trade divergence. But at this time it's important to use all the important facts which we will be using in our price action trading, and that is MACD. So before we begin, our standard is disclaimer explaining that online educational materials are available at Admiral Markets Estonia for a global audience. So take into consideration that information in this session may not be suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. So, to the end, final part of risk disclaimer, obviously missing, but I will tell you that Admiral Markets UK Ltd takes no responsibility for the information accuracy. So this is my opinion, and it's no way connected to AM UK. So, today's agenda: what is MACD? MACD explained practical usage of MTF MACD for trend and momentum stochastic and stochastic settings. This is the leftover from this. So we will speak about MACD today. Okay, so we will speak about MACD today. Main subjects so will be: what is divergence, why divergence is important, different types of divergence, and which divergence to trade. So this will be the most important parts of divergence, and then we will switch on to live charts. So don't ask how to trade divergence. Today we will speak what is divergence, different types of divergence, and which divergence to trade. And actually next time we will talk about how to trade divergence, because we need two separate lessons for that. We cannot put everything in a single lesson. Okay? So once more, today's agenda is divergence, which will be important part of your trading. Now, what is divergence? A lot of people probably would say that is when those lines are diverged or they are converged. So when we see lines are diverged, we say it's divergence. Well, basically, we can say it's similar like that. But the thing is that you cannot know the scale of divergence until you measure it from the indicator itself. Because stochastic divergence will show you different targets. MACD divergence will show you different targets, and there is one rule which we can use divergence for the targets. So MACD for me is still my favorite indicator, and even though stochastic may be faster, or CCI, which also can be used for divergence, I think that MACD is better. At least I use it. One divergence which is not covered usually during different webinars and different lessons is exaggerated divergence, and we will be talking about that today too. So MACD entries also are different from stochastic entries, but I will tell you that how I use divergence. Primary thing how I use it is if I want to go counter trend trade, if I want to make a counter trend trade, or if I want to see that price is very close to its reversal. Okay, so that is also very important. That way, when you see it, you will not be making mistakes of selling into support or buying into resistance, even though your system might tell you to do that. Now, of course, on this price action training school, you will learn how to use divergence exactly at important support resistance levels, such as dynamic support resistance levels, pivot points, but not simple pivot points, but also weekly pivot points, monthly pivot points, as we already covered. Now, the lesson about different pivot points will be held in February, so pay attention to that. It's already scheduled on the website, so you can sign up. It's very important that you connect all these things. As I already said, price action trading school will last for a full year. Okay, so it will last till August this year. After that, we will come to actually trading what we have learned so far. That will be another part of our price action trading school, actual trading. Okay, it's very important to understand every single lesson, because this will be maybe the bread and butter of your trading system or your trading method. So MACD divergence is, in my opinion, the strongest divergence of all. Okay, you can use with every oscillator, but MACD has been proven to work perfectly. Mr. William Blow also wrote it in his book Momentum Direction Divergence, so you can see the power every single time I publish the analysis and I said here is the divergence, so you can always see the power of MACD divergence. Usually we use divergence for a reversal. It can be used with continuation, but usually divergence is connected to reversal or retracement, or how I say it, usually where the price will stop. If we see uptrend and we see a bearish divergence, there is a big chance that the price will reverse or it will start to retrace. It's your early signal to get out of your trade. Also, there is another type of divergence called hidden divergence, where the price usually will continue after a retracement. So you wait for a retracement, hidden divergence shows up, and you go in a long trade. So those are different types of divergence which we will cover today. Why is divergence important? Because it's the earliest sign or indication of reversal. It's your early cue that we might see a retracement or reversal, but it's the earliest cue that the price will change the direction. It's very important, especially if you trade intraday, because on intraday your targets are usually in between 20 and 50, 60, 80 pips. So if you see divergence, then you know that it's time for you to protect your trade or exit or scale out. It's a good sign to scale into a position, because if you use hidden divergence and you see that there is a retracement within a trend and hidden divergence, that will be definitely a good sign for you to scale into a position. So by using divergence, you will be exiting early before actually price makes its retracement, which is good, because you might be exiting at the resistance or at the support, which is good, but also it means that you will be buying near the bottom or selling near the top, because you always want to buy low, sell high. If you read my dollar CAD analysis today, as soon as I published the analysis, price spiked up some 60 pips. So that is why I always say, guys, buy low, sell high. It's very important. That is the core of price action. That is the core of trading. That is the core of general buying and selling in your life. If you want to buy a good commodity, whatever, you want to buy lower. Sometimes you go to different, let's say, different websites, and you see that there are usually same products with different discounts. And usually you will, if you're smart, of course, you will buy the same product, but only with a discounted price. It's the same in trading, guys. It's definitely the same with trading. You definitely want to buy lower and sell higher. And that will make the risk on your trades very small relative to your potential reward. So we will cut it to the chase. If you still don't understand what divergence is, please ask a question. I will again explain. But I want to be very focused on our subject today, so I won't be bothering with a lot of theory craft. Of course, theory is good, but only if it's served in low quantities, because we want to actually have a practice. And that is why we will start with different types of divergence. So we have regular bullish divergence, hidden bullish divergence, regular bearish divergence, hidden bearish. And one more type, which I will tell you during this webinar, it's called exaggerated divergence. We will cover it. Okay? Remember, now, I intentionally left exaggerated from PPT. I will show you later, but it's very important for you to remember this thing. Hidden is trend continuation type, regular is reversal type. This is very important. Hidden is trend continuation, regular is reversal, and we will cover exaggerated. But now for this lesson, this is the most important part. Because a lot of traders are confused, very confused with different types of divergence. Some traders might not be able to differentiate between hidden and regular. Because I have heard back in time, some years ago, that some traders speculated that actually hidden divergence is stronger than regular in trend sense. That is not true, guys. Remember, hidden and regular divergence are totally different types. So hidden divergence is a trend continuation type. Regular divergence is a reversal type. Those two distinctions and those two types of divergence will shape your confluence points, if any, if you spot a divergence within a confluence. So this is very important for you to remember. Settings for MACD are 12, 26, 9. Default settings with MACD. And of course, I use different type of MACD. I don't use MACD, which is by default put on MT4, integrated with MT4. I use modified MACD. I named it MACD Camarilla. It's a simple MACD 2-line, but it's modified. If you still don't have it, you can ask for it on my email. I will send it to you. It's free, so I can send it to you. But most of you still have it probably. So we do not use a standard MT4 MT4 MACD, which is integrated in the platform itself. That is also very important. We will use a simple MACD 2-line indicator, which shows divergence excellent. It's an excellent indicator for divergence. You will see it. So regular bullish divergence is the first divergence shown. Regular divergence is the most frequent. It's usually considered a sign of trend reversal. If price is making lower lows, but the oscillator is making higher lows, this is considered to be regular bullish divergence. We don't need a series of lower lows. We just need one low to be lower than the previous low. And we usually can find it near the bottoms. So it's very important for you to understand it. So regular bullish divergence. Once more, if you're not sure, guys, please snapshot your screen, snapshot this slide. So price is making lower lows, but the oscillator is making higher lows. Okay, lower lows below the price, higher lows below the oscillator. So it's bullish divergence. Only one low needs to be made. So only one lower low and a higher low. You don't need a series. How you can snapshot? Just press a print screen button on your keyboard and you can snapshot it, and then you can paste it on, I don't know, in a Word document and write down regular bullish divergence, whatever. So usually it's very efficient way because I will be using examples. So you can snapshot also the example and put it below in a Word document. So this is an example of regular bullish divergence. So you can see that the price has made a lower low and the oscillator, which is MACD, has made a higher low. Now I'm talking from the perspective of any oscillator. We will use MACD, but the thing is every other oscillator will show you the same. So for every other oscillator divergence, CCI, RSI, momentum, on balance volume, the rules are still the same for divergence. Okay, guys, think about it. This is the price. This is the indicator. If the indicator is an oscillator, it can show divergence. But we use MACD on purpose because still in last 7 years, 8 years, I've been using MACD. Yes, Mr. Gaspacho is asking, will you upload it to YouTube channel? I will, so don't worry. Okay, so this is bullish divergence. Now, hidden bullish divergence. Now, it's a different type of divergence. A hidden bullish divergence is basically a sign of continuation. Sorry, guys. Screen should be okay now. Hidden bullish divergence. So now, the price is making a higher low, but the oscillator is showing a lower low. This is hidden bullish divergence. So higher low on the price and a lower low on the oscillator. We usually want to see this in uptrend because hidden bullish divergence hints to the chart continuing to go up. So this is the price, and below it, it's the oscillator, guys. Okay? A higher low is needed on the price, and a lower low is needed on the oscillator. I'm leaving you, I will give you some 30 seconds to print screen or snapshot the chart. You can try to find a program on Google. Just type snapshotting the screen and there will be some free programs which will allow you to snapshot the screen easily. If you're not sure how to do that from your Windows. Okay? Light shot is good and free, Mr. Gaspacho is saying. Okay, here I will show you. So it's light shot, it's the name of it. Okay, guys, now let's move on. Regular bearish divergence. Okay, this is also important part of your trading lessons because regular bearish divergence will happen in uptrend. Regular divergence, as we said, is a reversal type. If the price is making a higher high or has made a higher high, but the oscillator is making a lower high, then you have a regular bearish divergence. It can be found near the tops, and it's very effective if you use it in conjunction with historical swings, daily, weekly, and monthly pivot points. If you see that there is a rejection of the pivot point, let's say monthly, daily, weekly, whatever, just pay attention to MACD. Usually that rejection will be accompanied by a divergence. Okay, pay attention to it. So this is a regular divergence. Price has made a higher high, while the oscillator has made a lower high. Finally, hidden bearish divergence. Hidden bearish divergence is the type of the divergence which will hint your charts continuing to go down. So it's a trend type divergence. If the price is making or has made a lower high, but the oscillator has made or is making a higher high, that will be a hidden bearish divergence. It will give you the hint that the chart will continue in trend direction. It looks like this. A lower high here on the price itself, and a higher high here on the oscillator or MACD itself. Okay? So this is very important for you to understand, because this is what you will be using in your daily analysis. Now, exaggerated or reverse divergence. So it's a special type of divergence. You need to know about this, of course, but as I say, focus more on hidden and regular. But know also about reverse, or I call it exaggerated divergence. The only difference is, okay, I will tell you it's pretty much simple. Exaggerated or reverse bearish divergence will be found at the top of a larger move. Exaggerated or reverse bullish divergence will be found at the bottom of a larger move. So it's very similar to regular divergence. The only difference is divergence will create double tops or bottoms on the price, guys, but the oscillator will not make same double tops and bottoms. You see, this is the only difference. This is bearish divergence. Instead of seeing a higher high, the price can make a double top, or it will look double topish, while the oscillator will make a lower high. So this is the chart of a regular bearish divergence. The only difference is exaggerated will look like this. Okay, it will look double topish like this. So that is the only difference, guys. But know that this is also divergence, although it does not have a higher high, but it's still a divergence. Try to spot it on your chart. There will be a lot of examples which will show you that exaggerated divergence is a very similar divergence with regular type. But the only difference is a double top. Okay? Mark is asking, when the price is approaching support or resistance zone, on what time frame we will see the divergence first? Well, Mark, for intraday trades, I prefer to use 1 hour or 4 hour. That is for the analysis. But if you trade multiple time frame analysis, then sometimes it will be also shown on 5 or 15 minutes. Of course, it will be shown the first. But you need to know that on lower time frames is not that significant. The only exception I make is, for example, if I'm in a trade and the price has already dropped 20, 30, 40 pips, and if I see a divergence at the bottom, let's say, if I'm selling, if I see a regular divergence at the bottom, on 5 minutes, I will exit the trade. There are no strict rules. There are no strict rules for time frames. You can see divergence on every single time frame, even 1 minute. But the higher the time frame, the more important it is. Of course, for intraday trades, 1 hour is optimal. And for the analysis, you can also use 4 hour. But it's usually used for analysis. Okay? So you can spot it on every time frame. Of course, next lesson will be about how to trade the divergence. But now your goal is to learn about divergence. And next class will be how to trade it. This is exaggerated bullish divergence. Okay? So we see a sort of double bottom at the price, below the price, but we have a higher low on MACD indicator. Once more, exaggerated or reverse is we have a double bottom and a higher low on the MACD indicator. And these are some chart examples. Okay? This is bullish divergence. Okay? This is hidden bullish divergence. Higher low, lower low here. Of course, today I use other MACD. I will show you also on my new MACD, and you probably have it, but still, I will show you. But the principle is the same. Regular bearish divergence here. Hidden bearish divergence here. Lower high, a higher high. Exaggerated bullish divergence. Sometimes you will see triple bottom, not just double bottom, as in this example. Okay? Exaggerated bearish divergence. Look at the double top. And here the oscillator has made a lower high. Once more, let me roll the slide so you can snapshot it. So we can continue. Regular bullish. Okay. This is how it looks like. Hidden bullish. Regular bearish. Hidden bearish. Reverse or exaggerated divergence. This is bearish, exaggerated, reverse bullish. Don't be afraid that there is a lot of divergence show now, because this is exaggerated reverse is very similar to regular. But as I said, instead of having a higher low, we have double bottom. A lower high, we have double top. Some examples. So the principle is the same. Don't think that there is no divergence if you don't see, let's say here, a high. So it looks like this. This is still a divergence with a double top or double bottom or triple top and triple bottom. And it's called reverse divergence. So what type of divergence to trade? Hidden for trend trades, remember this is important. Regular for counter trend trades, okay? This is very, very important. Reverse for counter trend trades, because they are similar to regular divergence. Let's see it on live chart. This is my indicator, and this is how it looks like. For divergence, these are the settings. So this is what I use on Camarilla MACD template. It is also a part of practical naked trading template. This is how it looks like. I changed some colors. This is how it looks like. MACD, in my opinion, is so strong in showing divergence that is one of the best, I can say, trademarks of divergence. Omega trademark is watch trademark. It's my favorite trademark for watches, Omega. I always compare MACD to Omega. Always. Trademark of a good chart and price section is MACD. Very, very good indicator. This is so clear. You don't need really to be a doctor or a master to spot this. Now, guys, let me show you the examples. This is, I can say this is so easy to read because you watch wellies and peaks. Look at this, guys. Is there any divergence here? No, there is not. There is no divergence here, guys. Look at this. Price moves same direction. There is no divergence here. Now look at this. Is there any divergence here? Very easy to spot. Look at this. What is this divergence, guys? Okay, who will tell me the answer? What is the name of this divergence? Does anyone know? I showed you the slide. And no, Nam, this is not hidden. This is bearish. Marco is saying bearish, indeed. Evaldas is saying regular bearish. Yes, guys. This is regular bearish divergence. Okay. Let me show you again. Regular bearish. Here. Here. Regular bearish divergence. Now, guys, look at this. Let's find another example. Does anyone, okay, it's hard for me to ask you this way, but this is what you will be practicing, of course. Look at this, guys. Here. No, USD CAD is not a sell. I will show you now why. Don't ask me about trading entries. I already did the analysis of dollar CAD. It was a buy. And dollar CAD is a buy, definitely. I showed you. This was the time when divergence kicked in. Okay, here there was a divergence. You had divergence here, look. Here and here. So this is retracement. This is when price started to retrace. See? This is when price started to retrace. Now, this was very close to hidden divergence here. A higher low here, and it was very, very close. We might say this was a hidden divergence here because the price made a lower low here. Okay, this was a bit low here, but this was a regular divergence here. For me, primarily how I use divergence, I use a regular divergence most of the time. Because usually hidden divergence, you can see it here. It was maybe a hidden divergence. What did we say about hidden divergence? The price needs to make a higher low and the oscillator needs to make a lower low. Yes, this was a low, but it was basically, you cannot see it here. See, you cannot see this here. You can see a higher low here, but you cannot see a real low here. But you can say this was a hidden divergence. But usually it's very easy to identify. If you see that MACD is still above zero here, this line, and you see a higher low, it's basically a divergence, hidden divergence. So as I say, I mostly use a regular divergence. This is the example. And when I did this analysis today, you can check it on Admiral Markets, you will see that the price went up. Let me show you if you're still not sure what I'm talking about. This was my dollar CAD analysis. It jumped 100 pips after I made the analysis. From this POC, see here, it was 42.11. I was just worried that it won't be and it won't go down, but I wrote it in the article and it went up. Okay. See here, this could have been, and this was a hidden divergence here. And this was a retracement within the uptrend. And you see, the most important sign of an earliest reversal, the earliest cue for reversal was regular divergence here. Okay, same here, guys. Look at this. Now this is regular divergence 2. Okay, now let's use other examples, guys. Let's use pound dollar, for example, because it is in a strong downtrend. Strong downtrend. What did we say? If we want to see a trend divergence, we want to try to spot hidden divergence because it's trend continuation. Hidden divergence is lower high on the price and higher high on the oscillator. This was it, guys. Look at this. Very easy to spot. Here, a lower high and a higher high here. You can see it here. This is MACD modified, so it in hidden divergence you need to use it like this, but it's very easy to see. You see this valley here, the peak. This is the sign that the trend will go down. Same here. You see? Here and here too. Look at this part here. Same here. Now it's important for you to understand also how to use this indicator. If you want to follow my Camarilla MACD or my MACD, this is how I do it. As I said, a lot of principles I use from my Practical Naked template, a Practical Naked trading school, which is also very, very good because it was the core of Camarilla MACD trading. Okay. Okay, let me find another example. Okay, let's see if I don't see any questions. So guys, just type if anything is not clear. Please feel free to tell me. I will definitely help, but I don't see any questions. So okay, I lost the question now. Is there? Let me see. Here in the dashboard, I cannot see your questions. Not sure why. I had it here, but I don't see it now. Question pane here. Yes. Good. I see it now. Caesar is asking, Euro dollar weekly, is there an exaggerated bullish divergence? Euro dollar weekly. Okay. We will see Euro dollar weekly at the end of the webinar, but now let's focus on other things before I make it to weekly. But weekly is a too big time frame. Caesar, please, can you find another example, not weekly? Because weekly is very, very, very big a time frame. Example with Camarilla, Mr. Gaspacho, will be next time when I will be explaining how to enter a trade. Okay, so it will be next time how to enter a trade, not now. Okay. Ron is saying the hidden is better when you say OSMA, when you set it to OSMA. Yes, Ron, but I don't use OSMA or OSMA indicator here because it's, you see, it's also easy to see, Ron, if you do it like I do it. It's very easy to see. Really, this is not a problem. You see here, it's very easy to spot it. Look at this. Here, just use it like this. You don't need OSMA or OSMA. Look at this. Ron, is this clear to you? Or guys, please tell me, is this clear to you? Like this. Because this is how the indicator shows peaks and valleys. Okay, so this is hidden divergence here. Okay, so it's very important for me to be sure that you actually understand this part. Excellent, everything is clear. And this will be your homework. You need to practice it. I want you to practice it, guys. Very important to practice. You see here, there is no divergence here. Because both the price and the oscillator are moving in the same direction. No divergence here. Okay? So this is a regular divergence again. And it's easy. You just need to watch for this at the top. Okay? This is hidden divergence. This is reverse divergence. Everything is clear, guys. Everything is clear. As I said, the reverse divergence will not be shown every time on your chart, every single time. But you need to have double top and double bottom for that. Okay? You need to have a double top. Let's try to find hidden, or no, reverse divergence now. Let's try to find it. It might be a little bit hard task because we need to watch for double tops, bottoms. But here we can try to spot it indeed. Tops, bottoms. I think I might find one. Tops and bottoms. So here we see a double top. Okay, this is easier. It doesn't need to be a perfect double top. It should resemble a double top. So not a perfect, but it should resemble it. Okay. We see a double top and we want to see an oscillator here. I see it here. This is bearish divergence, exaggerated here. Okay, guys, this is the example of exaggerated or reverse bearish divergence. Double top on the price, lower high on the oscillator. Okay. Double bottom, look at this, guys, now. Double bottom here, again, on the price. And a higher low on the oscillator. Reverse bullish divergence. And you just see how the price behaves after it. Usually it will follow it immediately. After this divergence, it went up. After this divergence, it went down. So excellent. I didn't think I would find the examples so fast. So this was actually very, very good. It's not that all are divergence. This is not divergence. Look at this. This is not divergence because price moves with the oscillator. This is not divergence here. Okay. Next one. Well, yes, but you can see how it follows the price here. You see, the price started to drop. Indeed, this is divergence. But you see what the price did? It went down. So guys, this, this is trading. And the price follows it. Usually MACD, this is the strength of MACD indicator. It will follow the divergence. And it will show you what to do. So you might exit the trade. You might take a counter trend opportunity. And you will know that it's time for divergence. Okay, guys, it's still an uptrend, but this is retracement uptrend. Now let's say GBP. Let's see GBP example. I don't see any particular divergence here. Which time frame of GBP, Apostolos? You might, you're referring to a possible reverse divergence here. Well, it might go up indeed. It might go up indeed. Yes, 1 hour indeed. We see a double top. Well, it might go up, but it's already going up here. So it might go up. It's a reverse divergence, yes. Exaggerated, like this. Okay, no, it should be, no, it is not, let me see. No, it should have a double bottom here, but it does not have a double bottom, yes. It would have been a bearish if we had it like this, but it's not either bullish or bearish. So this is undecisive. We don't know if this is divergence or not. We don't know it yet. So in downtrend, you should watch for hidden divergence if you want a trend to continue. So you should watch for hidden divergence. If you want to see it, I'm not sure what you want to see. If you want to see a continuation, watch for hidden. If you want to see a retracement, then watch for regular. Okay? I usually watch only for regular and hidden. Exaggerated, not that much. So because it can, you know, it can mess up with pivot points, whatever, because pivot points, let's say Camarilla MACD or uses pivot points, Camarilla pivot. So this is blank chart. So I'm not very fond of double tops and double bottoms for divergence. I'm just showing you that it can be used and it can be good, but most of the time I use regular and hidden only. So for hidden divergence, you want to see a hidden bullish divergence. Hidden bullish divergence is, as we say, a higher low on the price and a lower low at the oscillator. Okay? A higher low, we can see it here, but we don't see a lower low. So Apostolos, for this divergence to be valid, bullish, this peak should have had a lower low. So it should look like this. Like this, but it didn't show up, okay? So there is no divergence here. Ron is saying from 31st December till 6th January. Yes, indeed. Here, okay, let's see. No. Still not. So we need to see a lower low here. Higher low here and lower low here. Okay, this is divergence here. Hey, excellent example. Excellent example. This was a hidden bullish divergence here. Look at this. And now is the time for me to show you why you should not take immediate entry with divergence. This was hidden bullish divergence. Okay? And you might think, okay, this could also mean that the price will go up because it's hidden bullish. It hints that the trend will continue. But trend is not bullish, guys. Trend is bearish here. You see? And this was also that what I was talking about 15 minutes ago. I said that a lot of traders make the same mistake. So hidden bullish divergence in bearish trend. What does it mean? It does not mean that the price will go up. You don't treat it as a valid point for your analysis. When you see a regular divergence, bullish divergence in downtrend, it's okay. But if you see a hidden bullish divergence in a downtrend, you don't take it as a valid technical point. You just forget about it. Okay? You need to forget about it because it's not important. It's not valid. Okay? It's not valid. And the only thing in bearish trend is what the valid divergence is regular bearish and hidden bearish, not a hidden bullish. Okay? Now, okay, one more example and we are ready to conclude the webinar. You will practice this, guys. Definitely you will practice it. Ron, yes, this was a divergence here. Regular bullish divergence, if you ask about this. Indeed, this was a regular bullish divergence. And you see what happened. The price went here, okay? Like this. But as I say, there are rules which needs to be respected when you want to take a trade with divergence. Most of the time, I use divergence only for analysis, not for entries, as you could have seen in my daily analysis. But I want you to learn about this. And I want you to learn every single thing I've shown you here today on this webinar. This will be your homework, okay? We learned about divergence. We learned about exaggerated reverse divergence. Try to spot MACD divergence. This will be your homework. Because next time, we'll be talking about price action trading school divergence going with the flow. How to actually trade divergence if you want to trade it. How you can trade the divergence. This indicator is available. So if you want to take the advantage of this indicator, of course, this is free indicator. Okay. And please email me here and ask for indicator. I will send you. So guys, this was it. I hope that you enjoyed the webinar. The webinar was not uploaded. Law is saying trading low time frames. Okay, I will upload it later. I will personally upload it later. So if it's not uploaded, I will upload it. Don't worry. So guys, please, we don't have time to talk about this anymore. Please practice this. This will be important for you. Okay, so MACD divergence, learn about this, repeat it. I will upload this webinar tomorrow. And next time, be prepared for how to actually take trades with divergence. How to actually trade it. Cheers, guys. And as always, trade safe.